Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Hazika binti Mak Mustaqim. Today, I will present about introduction of Takaful Underwriting and Claim Risk. This study discuss the Wakalah Wakaf model in Takaful. Takaful is an Islamic alternative to conventional insurance that emphasizes cooperation, mutual responsibility, and compliance with Sharia principle. Unlike conventional insurance which focus on risk transfer, Takaful practice risk sharing among participants. In the Wakalah Wakaf model structure, participants contribute part of their money as tabarruk into a Wakaf fund. The Takaful operator act as an agent and manage the fund through Wakalah changes. The fund is then used to compensate participants who experience loss. However, this model also faces several risks, especially the risk of deficit in the Takaful fund. This usually happens due to underwriting risk and claim risk, where the contributions collected are insufficient to cover claims. To overcome fund shortage, the Takaful operator provides Qard Hasan, which is an interest-free loan. Although this helps maintain participant confidence, continuous deficit may negatively affect the operator liquidity and financial position. Therefore, this study aims to evaluate the causes of deficit risk in the Wakalah Wakaf model and examine the financial impact of Qard Hasan while proposing Sharia-compliant risk mitigation strategies.
Assalamualaikum warahmatullahi wabarakatuh. My name is Natasha Balkis binti Hamzah Hendry, and now I will explain about the process flow Takaful, which is Wakalah Wakaf model. Firstly, who is the participant? Participant is an individual or customer who wish obtain Takaful coverage to protect themselves, their family, or their property or asset. So next, what are premium contribution? Premium contribution is the specific amount of money or periodic fees paid by the participant to the Takaful company. Next is fund allocation. The contribution are split into two main accounts. Firstly is Wakaf fund. A portion of the money goes into a Wakaf fund dedicated to social welfare purpose. This fund is initially started using a seed fund, which is the capital injection provided by the Takaful operator. The second is participants' risk account. Another portion goes into a risk account for the purpose of mutual protection in the event of a misfortune and disaster. Next is investment. Wakaf fund and participants' risk account to the investment. Money from both fund is pooled and invested into Sharia compliant investment instrument. Next is distribution of investment returns. The returns or profit generated from the investment are distributed to two places. First, return to the participants' risk account. That means is funneled back into the participants' risk account to strengthen the protection fund. Next, the second is the return to the Wakaf beneficiaries. That means is disbursed to eligible Wakaf beneficiaries, the target welfare groups. Okay. Next is claims management and surplus. First, the participants' risk account to the underwriting surplus or Takaful claims. That means the risk account is used to settle Takaful claims made by members who face a disaster. If there is any remaining balance or underwriting surplus, it is distributed back to the participant. Next is the role of the Takaful operator. The Takaful company acts as the manager and receive or provide funds through three channel. First is wakala fee. That means is an agency or management fee deducted from the wakaf fund as remuneration for managing the fund. Next is performance fee. A performance-based fee taken from the investment profit, rewarded for the efficiency in managing the investment. Next is deficit in participant account. If the participant risk account face a shortfall, that means which is the insufficient fund to pay claims, the Takaful operator will provide an interest-free loan, which is cut to cover the deficit. Next, I will explain about the scope of risk. The first is underwriting risk. The first point is the risk occur during the participant risk assessment process. This means this risk takes place at the initial stage when the Takaful operator evaluates the risk level of a potential applicant, such as checking their health, background, age, or occupation before approving their membership. Next point for the underwriting risk is weak risk assessment may lead to contribution rates that are insufficient to cover future claims. That means is if this evaluation process is flawed, the company might set the contribution, which is the premium rates, that are too low. As a result, the total pool of money collected will not be enough to pay out future compensation claims. The point number 2 is claim or fund deficiency risk. The point number 1 for claims of fund deficiency risk is the risk arise during the claims stage when the amount of claims exceeds the available fund in the participant risk account. That means is this risk is triggered during the active payout stage. Specifically, when the total financial value of claim filed by affected participants is large than the actual cash balance left inside the participant's risk account. The second point is this may cause financial stress and affect the stability of the Takaful fund. This means is running out of money to pay claims, plus heavy financial strength on the Takaful operator and directly strengthens the long-term stability and survival of the entire Takaful fund.
My name is Nurufati Natasha binti Muhammad Anis. For this section, I will discuss the main risks that may causes a deficit in the Takaful fund under the Wakala Wakaf model. This risk can affect the financial stability and sustainability of the Takaful system if they are not managed properly. Okay, first is underwriting risk. Underwriting risk is the one of the major risks in Takaful because it involves determining the contribution rate based on the participant risk profile. In this process, Takaful operator must accurately assess factors such as age, healthy condition, lifestyle, and occupations of the participants. If the assessment is inaccurate, the contribution collected may not be sufficient to cover future claims, which may eventually lead to the deficit in the Takaful fund. Furthermore, there is also the issue of information asymmetry, where participants usually have more information about their own condition compared to the Takaful operator. So this situation may lead to adverse selection, where the high-risk individuals are more likely to join the Takaful scheme. Another issue is moral hazard, where participants may become less careful because they know they are protected by the Takaful fund. So this situation may increase the number of claims and place financial pressure of the Takaful fund. This Takaful operator need to implement more effective and proactive underwriting practice to maintain the stability of the Takaful fund. The next is claim risk, which refer to the risk related to claim payment made from the Tabarruk or Wakaf fund. Okay, every claim submitted by the participant will reduce the available amount in the Tabarruk fund. If the number of claims become too high, it may result in a fund deficit and affect the financial stability of the Takaful scheme. Okay, several factors can increase claim risk such as a pandemic, natural disaster, and economic recessions that may cause a sudden increase in claim. In addition, rising medical costs and technological advancements in healthcare also increase the cost of each claim. Besides that, weakness in the claim management system, such as poor verification process, may create an opportunity for the fraudulent claim or manipulation by the participant. Therefore, Takaful operator must ensure that their claim management system is efficient, transparent, and ethical in order to maintain the long-term sustainability of the Takaful fund.
Assalamualaikum warahmatullahi wabarakatuh. My name is Robati Syahla binti Muhammad Faiz. My number card matric is 2023851672. So I will explain about the fund deficit and court Hasan obligation. So first, fund deficit happen when the total claims are higher than the available money in the wakaf of the Tabarruk fund. So this means that the amount of the money going out for the claims is greater than the money coming in from participants' contribution and investment return. So when this situation is happening, the Takaful fund may face difficult in the paying claim to participant. So at the same time, the participant may start to lose trust and confidence in the Takaful operator, that because it show weakness in the financial risk and the risk management. Okay, so what to solve this problem? To solve this problem, Takaful operator use the mechanism that called is court Hasan. So what is a court Hasan? Court Hasan is the interest-free loan that provided to support the Takaful from during the deficit. Okay, so it acts as emergency financial assistance, so that the company will be continue paying claims without interruption, and this helps maintain participants to confidence and ensure the Takaful operation continue smoothly. Okay, from the Sharia perspective, coercion is very important that because it is free from the riba or interest. Okay, it also avoid exploitation and excessive the horror. So beside that, it reflects the Islamic value of justice on the mutual assistance that called or ta'awun, which are important in the principle in the takaful. Okay, so however, coercion is also creates the challenges for the takaful operator. So the operator may use its own the financial that resources to cover the deficit, and there is no profit earned from the loan. Okay, so this may expose that the operator to liquidity risk and the long-term financial that pressure, especially when the deficit happen frequently or the claims remain very high. Okay, so in addition, the repayment of the coercion depends on the future surplus that from the takaful fund. So if the fund performance is weak or claims continue increasing, that repayment of the process may take a long time and create further financial pressure on the takaful operator. So that's all for me. Thank you.
Next, this section discusses reputational risk and participant confidence in the takaful industry. One major consequence continuous deficit in takaful funds is reputational risk. In Islamic finance, trust is extremely important because the industry is built upon fairness, transparency, and ethical management of funds in accordance with Sharia principle. When deficit continue for a long period, participants may begin to question the competency and integrity of the takaful operator. They may feel that the operator is unable to properly manage underwriting risk, claim, and the overall stability of the fund. Moreover, negative perception can spread quickly through word of mouth and public opinion. This situation may reduce confidence not only in a specific operator but also in takaful product generally. As a result, potential participants may hesitate to join the scheme due to concern regarding financial instability and the operator's ability to fulfill future obligations. Existing participants may also cancel their policies and move to alternative financial protection schemes. Consequently, the reduction in participant numbers will decrease contribution inflows into the takaful funds, causing additional financial pressure and making it more difficult to cover future claims. In the long run, reputational risk can seriously affect the sustainability and competitiveness of the takaful industry. Therefore, takaful operators must strengthen governance practice, improve risk management framework, and maintain transparent communication with participants to preserve public trust and confidence.
My name is Sirinanka Antasha, and I will explain about the governance and internal control risk in Takaful Fund Management. Governance and internal control risks are important factors that can cause inefficiency in managing the couple funds, including fund deficit. So, the first one, weak governance happen when there is an ineffective management structure, poor supervisions, and lack of proper oversight in financial decision making. This can create operational risks that can affect the stability of the couple fund. Next, weak internal control system make the couple operator more vulnerable to issues such as fund mismanagement, misuse of fund, and operational inefficiency. In addition, poor internal control may lead to investment decisions being made without proper risk analysis. This will increase the chance of financial loss and puts pressure on the Takaful fund. Therefore, deficits are not only caused by high claim but also weak internal management. Furthermore, weak governance can also lead to Sharia non-compliance, especially in investment and funding activities. This can affect not only financial performance but also reputations of Islamic financial institutions. For example, if internal auditing is not effective, financial weakness may not be detected early. Weak monitoring of investment can also result in uncontrolled loss. At the same time, lack of transparency in accounting also can reduce trust for the stakeholders.
My name is Sarah Izzati binti Hamdan. Next, I will explain about Wakaf Fund investment risk. In general, Takaful Wakaf Fund are invested in various Sharia compliant financial instruments such as Sukuk, Islamic stock, and Islamic money market funds. The main purpose of this investment is to generate returns that can support the sustainability of the funds and ensure that participants' claims that be paid when needed. Although these investments are designed to provide stable and consistent returns in the long run, they are still exposed to market risks. These risks mainly come from factors such as economic instability, political uncertainty, and overall market volatility. When the market become highly volatile, the funds may experience lower returns or even investment loss. This situation can directly affect the fund's ability to generate sufficient income for claim payments. If the investment performance is weak, the Takaful fund may need to rely on participants' contribution, which increase the risk of a financial deficit. In more serious situations, where there are no sufficient investment gains, the fund may need to use Qad Asan, which is an interest-free loans to cover the shortfall and ensure that claim can still be fulfilled. Besides that, the level of investment risk also depends on how well the fund managed. Factors such as proper diversification of assets, a good investment strategy, and the expertise of the fund manager play an important role. Pure management can increase the risk of losses, while effective management can help reduce impact of market fluctuation. Therefore, we can conclude that strong investment performance is very important in maintaining the financial stability of the Takaful Wakaf Fund and ensuring in long-term sustainability.
In conclusion, the deficit risk in Wakala Wakaf Takaful Fund is a complex issue caused by underwriting, claims, investment, and governance risk. With risk assessment, increasing claims, and poor investment performance may reduce the value of the fund, while repeated deficit can increase the operator's financial burden through the court hazard. Therefore, the risk level is considered medium to high depending on the effectiveness of risk management. So, to ensure sustainability and transparency, the Kafur company should strengthen internal control system and implement effective Sharia audit. And that's all from our group. Thank you.